Good morning, traders. Welcome to the morning market call. My name is Ian Joseph, market analyst at HFM, and it is going to be a really interesting morning market call where, as per the title of this session, we are going to look at Nvidia and what it is potentially doing in the markets currently at the moment as we do speak. Baraka, good morning to you too. But first, I would want to start by familiarizing ourselves with the disclaimer that states the information herein is only meant for educational and informative purposes only. None of it should be construed as investment advice. Trading the financial markets do carry a degree of risk, but do not worry. I'm here to help you look at the markets in the right way. I would want to start by talking about the pit stop tours. Yes, those pit stop tours that we are all familiar with. And
Remember those HFM events that everyone's been talking about? Yeah, the ones you said you'll attend next time? Well, hi next time. From the banks of Lake Victoria to the beautiful beaches of Mombasa, our educational events
here to
just
help.
got bigger. Better and bolder than ever, these sessions are just built for you. Whether you're getting started or you already know your pips from your profits. So, unless you like watching our highlights from your couch while everyone else levels up, maybe don't skip this one. 2026 is your year to level up and discover how Forex and cryptocurrency can work for you.
Indeed, and tomorrow we shall be resuming the coastal pit stop tour where we shall be in Boy Town at the Two Oceans Hotel on the 27th. Purpose to attend, and then we shall be off to Mombasa on the 2nd of March at the City Blue Creekside Hotel. Then on 4th of March, Kilifi, we are coming away at the Hotel Titanic. Then Malindi at the Hotel Rafiki. This is once again in Malindi Town. Purpose to attend. We are going to start our pip step tours tomorrow. Now, moving over to the morning market call, whereby I usually start by looking at the economic calendar. What can we anticipate on the day? And it's going to be a really quiet day in the markets in terms of fundamental news releases. We do have President Lagarde releasing her speech in the next 1 hour 28 minutes, which is going to affect the euro, and we shall have the initial jobless claims are coming out in the next 6 hours 28 minutes, and we will want to see how the job market is faring on in the United States. But the highlight, the elephant in the room, we are going to look at Nvidia, and yesterday they did release their earnings, which came in actually much better than anticipated. It was a record quarterly revenue of 68.1 billion United States dollars, which is up 20% from Q3 of last year and 73% up from 1 year ago. That's quite astonishing. And the record quarterly data center revenue is currently at $62.3 billion, which is up 22% from Q3 and 75% from a year ago. Now, we were anticipating these earnings to come out better than anticipated, but not the way it did come out as released. Now, what we would want to look at is now what strategy does Nvidia have? Where do they see the markets headed to in the near future? Now, we are looking at more than 4 to 6 trillion being added into the AI infrastructure in the next 5 years. That is quite astonishing. $4 trillion just in one sector of the markets, which is AI currently at the moment. And looking at Jensen Huang, who's the CEO, he did mention that computing demand is growing exponentially and the agentic AI inflection point has arrived. Now, the Blackwell, which is the new infrastructure that they are rolling out with NVLink, is the king of inference today, delivering an order of magnitude lower cost per token. And Vera Rubin, which is the next architecture that they are going to roll out, will extend that leadership even further. Now, the enterprise adoption of agents is skyrocketing. Our customers are racing to invest in the AI compute as the factories powering the AI industrial revolution and their future growth. Quite interesting. Now, I would want to pay attention to this next statement, whereby in the fiscal year of 2026, Nvidia returned $41.1 billion to shareholders in the form of shares repurchased and cash dividends. As the end of the fourth quarter, the company had $58.5 billion remaining under its share repurchase authorization. Now, whenever you do invest in a company, one of the things that as an investor you'll want to see is getting your money back. And we are seeing this company post better than anticipated profits. Now, if these profits are being generated, yes, money will go back to the shareholders. And if money does go back into the shareholders, it's going to attract more investors in the near future. Now, $41.1 billion is quite a record just from one company. And this means more money will be in the pockets of the investors who are investing in this particular company. Now, the next payout that they are going to have of dividends, which is $0.01 per share, will be on April 1st to all shareholders on record as of March 11, 2026. Meaning, yes, they are going to pay more people if they did invest in the company. Now, looking at the outlook, which is what we will want to pay attention to. Now, we have looked at, yes, the company is doing good, which is good, but where are they seeing themselves in the near future? And this is what we'll want to look at in terms of the outlook. Now, beginning in the first quarter of the fiscal year of 2027, Nvidia will include stock-based compensation expense in the non-GAAP financial measures. Now, the stock-based compensation is a foundational component of Nvidia's compensation program to attract and retain world-class talents. And this is what they have in store for the investors. Now, the revenue is anticipated to go even higher at $78 billion plus or minus 2, as Nvidia is not assuming any data center compute revenue from China in its outlook. So this money is going to exclude China. Now, the gross margins are expected to be 74.9% respectively, plus or minus the 50 basis points, inclusive of a 0.1% impact from stock-based compensation expense. Now, look, for the full fiscal year of 2027, tax rates are expected to be around 17 and 19%, excluding any discrete items and material changes to tax environment. Now, remember, this is an official document from NVIDIA that we are looking at. What we would want to start paying attention to is now the data centers. Now, when you look at the data centers, what are these infrastructure? Essentially, it means one thing. There's going to be a lot of money that is going to be used in building up this infrastructure. Where if you look at the Blackwell architecture, if you look at the electricity, the cost of electricity that this infrastructure is going to use, think of it this way. A computer consumes electricity. Now, imagine having an entire city just full of computers. And speculations are there is going to be a data center that is going to be built, which is closer to the size of the entire uh, Manhattan in the United States of America. What this means is that, yes, there is going to be a lot of electricity that is going to be used. There is going to be a lot of money. There is going to be labor that is going to be provided when people are required to set up this infrastructure. What this means is that, yes, more money will be in circulation in the near future as a result of the AI. We did see the Fed speeches that we had recently from Lisa Cook, we did have from Waller, we did have from Goolsbee. They also did talk about the AI, where they are going to adopt AI infrastructure and it is going to help humankind in a positive way. Yes, there were risks to, okay, could it deny people more jobs in the near future? Yes, there's that downside risk, but in the long run, the AI is here to stay. And as Jensen Yuang has mentioned, that it is at the highest inflection point currently at the moment. They are going to release new architecture once again, unveiling the NVIDIA Rubin platform, which comprises 6 new chips to deliver 10 times a reduction in inference token cost compared to the Blackwell platform. Now, cloud providers, which is what we would want to now digest the data. These are companies like Amazon Web Services, Google Cloud, Microsoft Azure and Oracle Cloud Infrastructure will be among the first to deploy Vera Rubin based instances. Now, last year, we did see prices of RAM, especially the DDR5. I am a gamer, and prices of RAM has skyrocketed more than three times the value as it was last year at a particular moment in time. Now, this is because of these companies now taking up most of the infrastructure. Yes, we are seeing a lot of demand compared to the supply that this company can output. But we will want to look at this information, ask ourselves, okay, how does this affect the stock market? How can I capitalize on these opportunities here in Africa? How can I trade on these opportunities? Now, we have to look at what Nvidia does. Nvidia, majorly, they do the designing aspect of the chips, but the manufacturing of the chips usually happens in Asian countries. When you look at South Korea, when you look at countries like Japan, they are big in terms of manufacturing these chips. So whatever happens to the company, Nvidia, is going to affect the broad economy. And in this particular case, we are going to look at, okay, what happened to the stock markets? We did see the stock markets rise up, and we are going to look at that information in just a few moments' time. But once again, we are looking at better than anticipated numbers in the near future, and they have really good strategies to tackle the AI demand that we are currently that we are seeing. The supply is not matching the demand of AI. When you look at what the gaming industry is currently facing on the fourth quarter, gaming revenue was up 3.7 billion, was 3.7 billion up. This is more than 47% from a year ago, driven by once again the strong demand for Blackwell architecture, and it is down 13% from the previous quarter as channel inventory moderated following a season of strong holiday demand. Now, the full year revenue rose 41% to a record of 16 billion on the gaming aspect of Nvidia, and they are going to launch the Nvidia RTX, which was delayed because of once again the demand and supply issues that the company was facing. Now, looking at the professional visualization of the company, once again, the fourth quarter revenue was up 1.3 billion, which is up 74% from the previous quarter. And look at this number, 159% up from 1 year ago, driven by exceptional demand for Blackwell, as the full year revenue did rise to a record of $3.2 billion. Quite interesting. Now, looking at the RTX Pro 5000, which is the 72 GB graphic processor unit to power large models and agentic workflows. Now, looking at the AI infrastructure, there was a meeting that was held recently with the top CEOs of these companies, also with the President of the United States, Donald J. Trump, whereby we did see most of these big companies, they are dedicating a lot of money in the next few years to help meet the demand that we are seeing currently at the moment. Now, if this money is going to go into the markets, first and foremost, jobs are going to be created. We are going to see the shareholders being paid more in terms of dividends, up from the 41.1 billion that we are seeing currently at the moment. Also, we are going to see now the stock markets advancing, whereby the United States is going to be seen as the hub for AI in the near future. I would want to switch now to the charts, whereby as a result of NVIDIA, what is happening to the markets and how could you potentially capitalize on these opportunities? But first, I will want to look into the Shield 500 account. This is a beautiful account for you as a trader to capitalize on, whereby
Introducing the HFM Shield 500 account, a revolutionary new account specifically for new traders. Within your first 25 days, trade with a peace of mind knowing up to $500 in losses are fully covered as tradable funds. It is your chance to learn, practice, and grow with confidence. Ready to kickstart your trading journey? Sign up today and deposit within the first 10 days to get full access to this exclusive offer. Click below to get started, only with HFM.
only with HFM, you have an opportunity to open the Shield 500 account. Capitalize on these opportunities. whereby if you do open the Shield 500 account, whatever money you do deposit between $10 and $500, if you do incur any losses within the first 25 days of trading, we shall back you up to $500 in terms of tradable funds. Terms and conditions do apply. Looking at this other charts, what I would want to start with is the Nasdaq, the US 100. Now, this is on the 15-minute time frame. Let me go to the 1 hour time frame, zoom in my charts. Okay, this is a beautiful place to start. Ever since 17th of February, we did see prices starting to roll to the upside, where investors were now looking at more potential upside to the stock markets. Now, looking at Nvidia currently at the moment, they do have more than 13% weight on the Nasdaq, meaning whatever happens to one company's, a big weight of the Nasdaq is going to be affected regardless of what the 99 other companies are currently doing. Prices did move from the lows of the month, which was around 24,396, till the highs that was made yesterday, just before the market does close. And this was when Nvidia did release its earnings. The prices of the Nasdaq did move more than 4.34% to the upper side. Just to put it into perspective, yesterday only, from the opening price to the closing price, prices did move more than 1.79% to the upper side because of this one company called Nvidia. Once again, when you look at the Nasdaq is a tech heavy index that we usually do look at, and Nvidia is the company that has the largest weight in this particular index. And as a result, if that company does perform better, it means the index is going to be affected. As a result, we did see prices rally for the entire of yesterday. And I do remember we were looking at this chart. We had identified this region of resistance here, whereby prices did break to the upper side, a clear closure of what we were looking at. We did have the 50 period and the 200 period having a crossover, where prices now started trading well above that region. Jacobs, thank you for the follow. And as a result, during New York session, we did see prices aggressively move to the upper side. We were looking at this region as the next potential target yesterday, of which prices did tap into that region with relative ease. And currently at the moment, we did have a short-term correction. This is normal, anticipated on the stock markets, whereby there's usually a repricing where prices did come back down slightly, but we do have a region of support forming. If we do happen to close above the opening price of today at 25,341, I will consider looking at more net long opportunities further to the upper side. Looking at it on the daily time frame, Nasdaq has been consolidating for quite some time, ever since September, towards the end of September, October, November of last year, prices entered into a major correction phase. But currently, at the moment, we are looking at prices now potentially trending to the upper side. If I can highlight this massive trend line that we have just broken out of, where prices has been bouncing, we were trying to see some sort of sellers in the markets with the result of the geopolitical tensions, with the result of the tariffs. But once again, the AI markets, Nvidia did come in, save the day, and as a result, prices are now anticipated to continue being bullish in the near future as a result of the consumer confidence and investor confidence in terms of the AI architecture that we do anticipate to be rolled out as the year does progress, which means that if investors are going to invest into this company more, it means this company is going to be valued even at a larger value than where it is currently at the moment. Hence, we would anticipate prices of the Nasdaq also to continue moving further to the upper side. There were tensions of could this be an AI bubble starting, but from the earnings that we have been receiving recently, the earnings have been coming out much better than anticipated. One of the things that had people worried with the AI was the capital expenditure. When you look at Amazon with their AWS infrastructure, right now Amazon is reinvesting more than 90% of its total revenue back into the infrastructure, because once again, these chips do cost quite a significant amount of money. Now, for them to build these data centers, they do require a lot of money also. So look at it this way: when a company is trying to expand, they usually reinvest most of their earnings back into the company to help in the near future. Now, this is going to affect short term cash flows, as now there's going to be a shortage of cash in the short term. But if you look at it in the long run, yes, this is anticipated to be positive, similar to what Amazon did in the late 2010, whereby they were reinvesting most of their capital back into the markets. And as a result, when you look at Amazon right now, they do have more than 40% share of the e-commerce business in the United States. And we would anticipate that, yes, also this could have a similar pattern in the near future, where now whatever they are doing right now, in the near future, it's going to start paying off. And once again, the Nasdaq could potentially move further to the upper side. When you look at the Dow Jones didn't have as much as volatility compared to the Nasdaq, but yesterday also we did see prices closing well above the opening price of the day. We do have a bit of consolidation currently at the moment. Now we are looking at the Dow Jones Industrial Average. Usually this one comes alive during the New York session, as you can see historically speaking, whereby during Asian session, London session, the Dow Jones usually consolidates most of the time, and then during New York session, then that's when we do have the volatility. Similar to what we did see yesterday, prices did consolidate, a bit of volatility during London session, but most of the volatility did come during New York session. Currently, at the moment, we are seeing a similar pattern, but come New York session today, we would also anticipate prices to be very volatile, as investors will now be repricing what could potentially happen in the near future. When you look at the S&P 500, the S&P 500 did slightly better compared to the Dow Jones Industrial Average, whereby yesterday it did move close to 1.2% to the upper side before prices did close. A short correction during the opening price of Asian session today, which is this particular candlestick on the line, but we have had relatively small candles indicating there is really low volatility in the markets currently as we do speak. But come during New York session, we would anticipate the markets to start gyrating. Looking at the S&P 500, at the moment, the S&P 500 is trading almost at the all-time highs. Looking at the S&P 500, it has never tapped onto the 7,000 mark. If we do break above this region, then the ceiling potentially would have been broken and the sky would be the limit, whereby we would anticipate prices to continue moving further to the upper side, especially looking at how prices has been consolidating for quite some time. If you do have a clear closure above the highs that was formed, and this was back towards the end of January, I will consider looking at potentially more net long opportunities further to the upper side. Now, when you're looking at Nvidia, yes, it is affecting the United States stock markets, but not only on the US stock markets. When you look at, once again, Nvidia are mostly designing these chips. Most of the manufacturing of the chips does occur in Asian countries. When you look at the Nikkei 225, which is the Japanese stock index, where is it? JPN 225. Here you are. Now, looking at the Nikkei 225 on the daily time frame, very, very bullish, but I would want to go down to the 1 hour time frame. Look at the massive momentum that the Nikkei 225 had yesterday, ever since Asian session up until the closure of New York session. Nvidia did rally quite aggressively to the upper side. Just to put it into perspective, from the opening price of yesterday to the closing price, the Nikkei 225 did move more than 3.64% to the upper side as a result of, yes, once again, most of these companies are tasked with the manufacturing aspect of the chips for Nvidia. We did have a short-term correction during Asian Open today, but currently we are getting signs of support around the 50-period moving average. If you do have bullish candlestick patterns forming around this region and a clear support forming where it is currently at the moment, I would anticipate potentially prices of the Nikkei 225 to move further to the upper side, potentially taking out the highs, which is an all-time high. If you look at the Nikkei 225, this is an all-time high at 60,090. And the Nikkei 225 has never, ever in history tapped onto where it is currently at the moment. And this is all because of Nvidia, the biggest company in the world currently at the moment. Now, the Nikkei 225 has broken the ceiling. We will want to see now potential a region of support forming for a further continuation to the upper side. I have in zone is into Empire. Yes, we are the biggest broker, not only in South Africa, but in Africa in general, currently as we do speak. This is why we have the best market analyst, yours truly. Now, looking at Nikkei 225, once again, if we do have a bullish candlestick pattern forming around this region of support, I will consider looking at potentially prices moving further to the upper side. This is a decent range for us to capitalize on. This is more than 2.15% to the upper side. But once again, if we do break and close above this region, then all stars are aligning for markets to move even further to the upper side. When you look at other stock markets, they are doing relatively well. If you can consider the UK 100, the UK 100, the FTSE also did rally to the upper side yesterday, and all of this once again is because of Nvidia, the tech giant, whereby the FTSE did rally more than 1% to the upper side, currently with similar price action to what we have been seeing on other markets, whereby during the first candlestick of today, we did see prices move to the downside, but we are now having small candlesticks with larger wicks, signaling that yes, indeed, this could be a short-term correction for prices to continue moving further to the upper side. On the FTSE, we are already seeing the market starting to rally to the upper side. The volatility from London session is already coming into play, and I would anticipate potentially prices to continue moving further to the upper side in the near future. When you look at other markets, when you look at the stock markets now for Nvidia, because we are looking at Nvidia. Let's put it into perspective from ever since the month did begin on February, we did see a short repricing whereby the stock markets did move to the downside close to 8%. But afterwards, we did see Nvidia starting to rally aggressively to the upper side from the lows that was made on 5th of this month till where we are trading currently at the moment. Nvidia prices are up 14.51%, and we do anticipate, yes, the future is looking really positively for the company, and we would anticipate could. Do you believe that Nvidia could potentially break the all-time highs that it does have currently at the moment, around $212 per share in the near future? Now, if the data continues to come out positive for this company, then yes, indeed, this could be a likely scenario for Nvidia in the near future, where if you can put it into perspective from where we are currently at the moment to the all-time highs, this is less than 8% of its total value, which we have seen it move 14% from the lows of the monthly time frame, meaning 8% could be a quite reasonable target range in the near future when you're looking at this company. When you look at also Apple, Apple did post better than anticipated profits, and we are seeing the stock market of Apple also moving to the upper side. The all-time highs on Apple stock shares, it's around $288.46. Quite interesting, saying that yes, indeed, bulls are controlling the markets, whereby we did have a change of character. Prices are now making higher highs, higher lows. Potentially, if we do break the highs, the most recent highs, and these are the highs that was made during February, early February, this month, we could potentially move even further to the upper side. Now, if you do have any asset that you'll want me to look into, kindly put it in the chat section. But we have digested the elephant in the room, which today was Nvidia. And potentially, we could anticipate more moves to the upper side. I would want to look at the 10-year treasuries. Now, usually, if the stock market does well, historically speaking, Queen wants me to look at USD JPY. Okay. Historically speaking, when the stock market is doing well, the treasuries usually take a dip. Why? Because investors would want to look onto higher yielding assets, which right now, currently at the moment, could be the stock markets as a result of Nvidia, where we would see now money moving from the treasury markets, from the bond markets, government issued bills moving now into the stock markets. But if the stock market starts to tank to the downside, historically speaking, now we see money move from the stock markets now into the treasuries and other safer havens. Looking at the 10-year treasuries, ever since the year did begin till where we are currently at the moment, we have seen the 10-year treasuries take a massive move to the upper side, especially this February, where the tensions were cooling down. We still have ongoing tensions, friction that we do anticipate between the United States and Iran in the near future. But once again, that could potentially come to be something of the past in the near future as a result. And investors, institutions were now looking at the 10-year treasuries, where from the lows that was made on 3rd of February to the highs that was made last week, we did see the 10-year treasuries move up by 1.8%, signaling that yes, indeed, investors are still confident about where the United States dollar is headed to. Now, once again, this is usually a gauge of what institutions, traders are looking at in the near future. If you look at it on the weekly time frame, yes, it has been rallying to the downside ever since the highs that was formed just before the pandemic. But currently, at the moment, as you can see, ever since September of 2023, it has starting to pick up to the upper side, signaling that yes, indeed, investors could be moving back onto the 10-year treasuries. We are just about to cross over on the 50 period and the 200 period moving average, signaling that yes, indeed, whatever was happening in the past could now start be reversing, and prices could move potentially further to the upper side. We are still well below the highs that was formed last year, which was around 114, which is a decent range to put it into perspective. From where prices is till the highs of 2025 is close to 0.82% to the upper side. Considering that this month it has done more than 1.8%, meaning in the near future, if institutions, investors are going to be much more confident in the market, we might anticipate the 10-year treasury is also potentially picking to the upper side. Queen wanted me to look at the dollar against the Japanese yen. Now, reflecting on what has happened in Japan with the Nikkei 225 today, this is on the H1 time frame. Now, prices did make aggressive move to the downside, and this was when Bank of Japan did release its monetary policy, whereby they did hold on to the interest rate where it is currently at the moment. But we are looking at potential signs in the near future. Bank of Japan is going to increase interest rates. Now, if they do increase interest rates, the Japanese yen potential is anticipated to be stronger. But currently, at the moment, we are seeing a repricing where prices did change character, making higher highs, higher lows, higher highs, higher lows, higher high, the most recent higher low on the 1 hour time frame. During Asian session today, we did have a support forming around this particular region. But what I would want to pay attention to is the highs that was formed just when Bank of Japan did have their meeting. And this was a while back. This was around 10th of February, earlier this month. If we do find this region of resistance failing to be broken, and a clear resistance bearish candlestick patterns forming, I will consider looking at shorting opportunities further to the downside. But currently at the moment, as we do speak, the USD JPY is in an upwards trajectory where prices is now currently bouncing off the 50 period moving average. The 200 is well below price action, signaling that yes, indeed, buyers, the bulls are still in control over the markets. Now, short-term opportunities that I would want to look into, I want to see how prices is going to react, how we do break, or if we do break and close above the opening price of the daily candle during New York session today. I would consider looking at more potential opportunities or prices moving further to the upper side. But on the other hand, if we do have signs of resistance forming on the opening price of the daily candle, I will consider looking at shorting opportunities further to the downside. But this is all going to be dependent on the data that is going to be released during New York session today, whereby once again we do anticipate ADP. We do anticipate initial jobless claims. We did receive ADP recently, but if I can go back to the economic calendar, we do have initial jobless claims coming out today in the next 5 hours 56 minutes. Now, this one is considered lagging data, but it's also wise for us to keep a keen eye on how the labor market is performing in the United States. Now, what is this data? It's a measure of the number of people filing first-time claims for state employment insurance. So, how many people lost jobs in the we are looking at the month of February. Currently, at the moment, the previous number does stand at 206,000. We are looking at a forecast of 215,000, which is higher than anticipated. Now, usually, if the data comes out higher than anticipated, this is seen as negative or bearish for the United States dollar. But if the number does come out lesser than 215,000 jobs, it means actually more jobs were retained in the United States economy. We would want to look at next month's employment data, which the Fed Reserve did mention that this could be the turning point of how they are going to set monetary policy in the near future. If the job numbers for February, which is going to be released the next week, next Friday, if the data does come out negative, the Fed could be prompted to hold interest rates where it is currently at the moment. But if the numbers do come out lesser than anticipated, now the Fed could be prompted to lower interest rates as a result and stimulate the economy in the near future, which is going to be a really active day for us as traders in the next few trading weeks. Reflecting back on the markets, once again, that was USD JPY. If you have any asset that you'll want me to look into, kindly put it in the chat section. I would want to look at gold. Gold has been consolidating for quite some time, playing around the 5,000 mark. We did have signs of buyers coming in the markets last week. Let me remove my trading history. We did have signs of buyers coming in the markets last week on Friday, whereby there was a repricing and the markets did move to the upper side. During Asian session on Monday, prices moved aggressively to the upper side, consolidated towards the end of Asian session, London session, but during New York session, we did see bulls drive the markets further to the upper side. For the entire of Tuesday, the bears were in control over the markets. Yesterday, prices did consolidate. Considering where prices did open and where prices did close, it is not far away from the opening price, signaling that yes, indeed, institutions are now looking at okay, other assets. Remember, gold is a safe haven. Gold usually thrives as a result of uncertainty. Whenever there's fear in the markets, gold usually buys. But whenever there's greed in the markets, gold usually either consolidates or drops to the downside. Currently, at the moment, most of the focus is on the stock markets, especially Nvidia. And as a result, we see more participation in the stock market compared to the precious metals. But in the near future, if the tensions still continue in terms of the US and Iran, whereby the United States would want Tehran to completely do away with the uranium enriching program. If that deal fails to go through, there is a high likelihood in the near future that we might anticipate friction between the two people. And as a result of wars, gold usually moves to the upper side. But currently, at the moment, looking at it on the H1 time frame, during Asian session, we did see prices rally to the upper side but consolidated. Yes, it is moving significantly in terms of pips, but on a larger perspective, gold is basically consolidating. If you look at this one particular candlestick yesterday, just before the markets did close, prices moved close to 600 pips to the downside in less than an hour. Yes, if you're looking at lower time frames, that looks like a significant move. But if you look at it on a larger time frame, as you can see, gold has majorly been consolidating for quite some time, especially the majority of this week where prices has neither been making clear higher highs, prices has neither been making clear lower lows in the markets. Silver, similar thing could be said, whereby this week prices has just been ranging, printing side by side, signaling that yes, indeed, institutions, investors, and traders are looking at other higher yielding assets currently at the moment as we do speak. When we can reflect on energy, starting with US oil, US oil last week did rally to the upper side. This was the tensions that we did see as a result of US and Iran. We did see prices of oil move to the upper side because potentially if the Middle East go to war, a huge chunk of the oil supply is going to be affected. And as a result, the demand is going to go higher, where prices of oil did move more than 8.52% from the lows to the highs of last week. But considering this week, most similar to what we have been seeing on gold prices, prices did find a region of resistance around 64. $66 to $67 a barrel, and we had sellers coming into the markets, prices correcting. If you do have prices finding a region of support or bullish and candlestick patterns around the 50 period moving average, as you can consider, the 200 is well below price action, signaling that yes, indeed, prices currently at the moment are still bullish. Now, if this does happen, I will consider looking at more potential of oil prices moving further to the upper side. If at all we do fail to break the lows and the opening price that was formed during this week. Currently, at the moment, this is the range that I would want to pay attention to. If we do have a clear breakout to the downside and the deal does go through between the US and Iran, then potentially prices of oil could move further to the downside. But if the friction does continue to go on, and Trump did give them an ultimatum of between 10 and 15 days, which is supposed to end this week or early next week, we want to listen from the White House. What are they going to do? Currently, as we do speak, there is a lot of military personnel headed to in the international waters around the Middle East, and the United States could be preparing for something in the near future once again if the deal does fail to go through. Looking at other markets, let's look at GBP USD. Looking at GU, we have been rallying to the downside for quite some time during the majority of last week, but currently this week we did have a change of character whereby prices now started breaking the most recent region of lower lows, lower highs, and we are now starting to form higher highs, higher lows, higher highs, and potentially the region that was once a resistance that was formed on Monday and Tuesday and Wednesday during Asian session was broken to the upper side. We are seeing prices correcting back into this region. If this region that was once resistance potentially becomes support in the near future, if we do have a crossover on the moving averages, I will consider looking at more opportunities further to the upper side, potentially for prices to come back, filling the inefficiencies that we have been living out in the past. But if we do have prices closing well below this region, then this could be considered a fake out for prices to continue rallying further to the downside. We do have the next region that I would want to pay attention to, which actually is where prices has just tapped on today. Now, these are the ranges that I would want to pay attention to on the Great British Pound against the United States dollar. I would want to finalize by looking at the dollar index. The dollar index usually is an index that measures the dollar against a basket of six currencies, with the euro having a majority of the weight. We do have the British pound, we do have the Japanese yen, and more currencies. Now, usually, if the dollar index moves up, it means the dollar is considered stronger. But if the dollar index moves down, then we consider the dollar as being weaker. Currently, at the moment, we did see during Monday session when most of the metals moved up, the dollar index actually moved down. But before the day did end, we did see the dollar index correcting and prices has just been consolidating. What I would want to look out for now is the lows that was made during Asian lows on the weekly open, and the highs that was made last week on Friday. Now, one thing I would want to this is on the H1 time frame on the NAS on the dollar index. One thing I would want us to be aware of um, is today is Thursday, tomorrow is Friday. The monthly candle is about to close. Usually, when the monthly candle is about to close, we usually see one of two things. Either investors would want to take a cautionary stance of wait for new data that will come out next week in terms of employment inflation like CPI, PPI, PMI, PCE, or we could see now institutions, investors now starting to prepare for the move before it does happen. So usually towards the final days of the trading of the monthly candle, we usually see either volatility increasing or volatility dying down. Marseille, if you have any issues, kindly contact support. No worries about it. Shada, once again, support is the best way for you to be assisted. Support.ke at hfm.com. We do have our services 24/6, so you will be assisted on with the support. Now, I would want to finalize by looking at the loyalty program. HFM has just rolled out the biggest program yet, and indeed, if you go to the bonuses and promotion segment on our platform, we do have the HFM loyalty program. And this is the biggest program yet, whereby there's going to be up to $500,000 in cash prizes. There's going to be an apartment up for grabs in New York City. You're going to have an opportunity to win a supercar on a choice of either a Lamborghini or Ferrari. There's going to be luxury vehicles, a choice of either Mercedes Benz or a BMW. We are going to have high end electronic devices, choices of either iPhones or Samsungs. We are going to have tablets that you're going to give away, and many more. How does the loyalty program work? For every trade you do take, you're going to earn trophy road points or TRPs. And these TRPs are your currency for unlocking trophies. Now, these trophies, you can either redeem them for cash prizes, or you can either use them to redeem for the rewards. Now, I do have Bobo. Trust you me, we did give away a Mercedes Benz. These are on the 28th of this month, which is when the score and draw challenge is going to conclude. We are going to give away a brand new BMW. We did give away last week, we did give away a 55-inch TV. Last week, we did credit five traders with $200 each onto their accounts. And this is, when you look at HFM, we are the most rewarding broker. As a result of the traders, we usually do reward our traders. For any person who's going to join on these programs, if you do happen to be on the leaderboard, you shall be credited. That's going to be it for me. My name is Ian Joseph, market analyst at HFM. I shall see you when you do see me next. May the pips be with you. Kindly go over to the HFM's bonuses and promotion segment. You do have a lot more in store. When you look at the demo contest, I would want to look at the leaderboards before we do end this session. Currently, at the moment, we do have Eric Wambugu with 20,000. So Eric Wambugu will be credited $500 onto their accounts. Last month's winners, I do believe Evans Kiburi already shall be credited $500. Emmanuel will be credited $300, and Titus will be credited $100. So if you are on the leaderboard number 1, 2, and 3, you shall be credited also onto your account. We have that and many more on our platform. Remember, once again, HFM is the most rewarding broker. That's going to be it for me. Stay safe. Take care of yourselves.